remember, these entries are included in our consolidation worksheet at the end of the current financial year, so on the 30th of June 2013. And also remember that it's not permanent entries that are passed in the accounting records of BEL, the investor. So therefore we need to make adjustments on a year-to-year basis for the financial period since our acquisition date until the beginning of the current financial year. So the first adjustment would be to increase the value of our investment. So we debit our investment in the associate with our share of the associate's profit and loss until the beginning of the current financial year. So we've just done that calculation and calculated it as 10,770. And that's going to affect our retained earnings. Opening balance or on the 1st of July 2012. So that's going to increase our opening retained earnings balance. The other two entries that relate to our share of in the profit or loss of the associate at the asset revaluation surplus is the same as irrespective of whether you're consolidating or not. So I'll just copy them here quickly. So it's investment in Chime, $9,000, and credit our asset revaluation surplus, and debit our investment in the associate, 49170, and credit our share of profit or loss of associate, 49170. Okay, so these relate to our share in the equity movement of the associate in the current year, and this sub-journal entry is to record our share of the profit and loss for the period since acquisition date until the end of the previous financial year. Okay, so these three entries then reflect our share in the movement, the post-acquisition equity movement of the associate to bring our investment account up to date, to reflect our bigger stake in the or the increase in the equity of the associate. The next entries that we're going to have a look at is the dividend that was paid and declared by the associate. Now remember, if the investor company BEL is not preparing financial statements, the dividend revenue will not be included in the income statement, but the entry is then either debit the bank when we receive the dividend or debit the receivable for the dividend and credit our investment in associate to reduce the value of our investment with the dividend figure. But when we consolidate, the consolidation worksheet entries aim to eliminate the transaction that was passed in the investor's accounts. When the dividends were declared or received by the parent company, in the parent company's records there would have been an entry, debit cash or dividend receivable, and credit dividend revenue. This entry needs to be eliminated then on consolidation. So when preparing the consolidated financial statements and we incorporate the equity accounting entries, we need to reverse this entry in the investor's accounts. So what we'll see is two entries. First of all, with regards to the dividends that was paid, so that is if that journal was passed where we debit our bank. So in order to eliminate this entry on consolidation, we're going to say debit dividend revenue credit our investment in associate. Similarly, where we have a receivable, so the dividend was declared but it's not yet been paid, say debit our dividend revenue, credit investment in associate, also $15,000. So as you can clearly see, the effect of this after the consolidation worksheet entries have been incorporated would be that for the dividend that was paid already, would be that our cash balance would have increased, those two are eliminated, and our investment in associate balance is reduced by the dividend. Similar to what is done directly in the investor's account. With regards to the dividend that is receivable, you can clearly see that our dividend receivable will be still lying on the consolidated financial statements. The dividend revenue is eliminated, and the investment in associate is reduced by the declared dividend. Okay, so that covers the two scenarios when the investor does not prepare consolidated financial statements and the scenario when they have to. If you feel free to post any further questions, if you need clarity on any of the items that or concepts that we discussed in these video clips.